Hello, and welcome to another edition of Selling Life Annuities. I'm Tim Luby. I'm the National Sales Director for Annuities at Gordon Marketing. And with me today is my good friend and associate, Steve Allison, our internal annuity specialist. And we're here to talk today about bonus annuities. They are better than ever. So Steve, bonus annuities have kind of back. They've had a sort of a resurgence. How does a bonus work?
Yeah, they have to come back a little bit. We're seeing more even carriers come out with new bonus products. They're also coming out with increases in their bonus. But basically, how it works is when a client invests their money with the carrier, they give an additional percentage immediately right onto their account value.
So that's certainty. So give me an idea what kind of bonuses are available. What are some of the percentages that we're seeing available?
Right. Well, we've seen them as high as up to 20% with a fee for accumulation products. Without a fee, up to 12 or 15%.
So 20 is very high, and there's a fee there.
Yes.
But with no fee, there's 10% bonuses out there now without fees, right?
Oh yeah, 10, even 12%. And some of those have increased over the past few months. They used to be more like 7 or 8%. So they're coming back, they're changing, they're increasing, and they're better for the clients now.
Right. Mm-hmm. So the numbers are higher. The numbers are pretty good, and a lot of clients are drawn to these. So a typical bonus is 10%. Where does the bonus kind of come into play? Where are some of the places that it makes a lot of sense to use a bonus?
Yeah, well, two come to my mind right away. One is maybe a client's been in the market and they've had some downturn in their value there, so they want to catch back up, and so an extra 10% right off the bat will help them. Maybe they've lost 8 or 10%, so they can get it right back. Another one that we see often from our agents when they call is their clients have money right now into an annuity, and they have a surrender charge, maybe 3 or 4%. So that bonus can cover the surrender charge and still give them a little bit extra.
Good, mm-hmm. Right. So a bonus has a high degree of certainty, right? There's not always with a fixed index annuity, for example, a guarantee that you're going to earn interest. You won't lose value. 0 is the hero, but you might not get a credit. But a bonus offers a great deal of certainty that no matter what happens, they're getting the 10 or 15 or 20% today, which can help, make up for losses that they've incurred, as you mentioned, either through market losses or whatever it may be, a surrender charge. Yep. So one of the key features, I think, there is the certainty, right? The certainty that a bonus provides, and that can go a long way. So are there any drawbacks? What would be what do you see as potentially a downside to a bonus?
Yeah, that's a good question because typically you get excited about a bonus, but there are some things that do draw back. And one typically we see is the growth potential with like the allocations that you can pick, the indexes that you can pick. Sometimes they're not as high as ones without a bonus. Other ones that you have a vesting schedule. So the bonus you get right away on top of your account value. But if you were to withdraw that early during the surrender period, you may not get that full amount. They may withhold back a portion of it.
Right. Which would be subject to sort of a vesting schedule, right? Or some kind of recapture situation on bonuses, right? Yeah. So there's a certainty there to the extent that they wait for the surrender charge, but they don't get a 10% or 20% bonus day one and get to put it in their pocket and walk away day two. Yeah. Right. Yeah. Which is really interesting. So those are some of the potential drawbacks. Some of the advantages of using a bonus product. We talked about the fact that they can overcome surrender charges or market losses, but we're also seeing carriers now that will include the bonus in the calculation when they look at what they will and won't take from a suitability standpoint, right? Yeah,
sure. That'll definitely go into it. They want to make sure that the transfer of assets from one annuity to another is actually a good fit for them, where they're not incurring a 12% surrender fee and only getting a 10% bonus. They're still coming out on the worst end of that. So that in that situation, they probably wouldn't even accept the funds. So you have to manage the client's surrender charge, schedule along with the new bonus that they may get to make sure that it fits just right for everybody.
Right. It's part of the suitability process, sort of proving or demonstrating that it is in the client's best interest to do what they're doing here. So for the benefit of those that are watching us today, if they like what we're hearing and they want to engage with us, we welcome you. We want to have you see us as an extension of your team. How do they engage with you on the annuity team at Gordon Marketing?
Yeah, definitely reach out to one of us. We can certainly help you with managing those surrender charges or the differences that they may be looking at. But we can reach out to me. My extension is 140. My email address is sallison@gordonmarketing.com.
And you can reach me at extension 213, and my email address is timl@gordonmarketing.com. So with that, we're kind of running out of time here just briefly. But if you would please do us a favor, and if you would subscribe below, hit the notification bell, and if you'd be so good as to like, comment, and share what you've heard today, you'll be aware of all the Selling Life and Annuity opportunities as they come out. But with that, thank you for joining us for our bonus annuity discussion, and happy selling.